Okay, I'm going to explain the standardized quiz question number 2, income statement and balance sheet. So for the first information, they say that the net realizable value of the inventory at year end was $35,000. Okay, the word net realizable value, also known as NRV, okay, is known as the amount inventory is worth. Okay, what they're implying is that at the end of the year, my inventory, okay, let's see inventory. Okay, my inventory value here, okay, is worth $35,000. But the cost that is reflected now is $39,000. Net realizable value is $35,000. Okay, that's why you have to reduce $4,000 to get $35,000. This drop in value of my inventory is known as impairment loss on inventory. Okay, that's how you get $4,000. Okay, my value of inventory drops by $4,000. Okay, the next information. Advertising expenses included advertising expenses of $1,004 paid for 6 months, ending 30th September. Okay, my year end in this question is 30th June, okay, 2018. This is the one given by the question. Okay, but this expense is paid up till September 30th. Okay, so if we count, my year ends in June, but I'm paying until September. Okay, that means there's actually 3 months that are prepaid. I've paid in advance for July, August, and September. Okay, hence my prepaid advertising is $1,004 paid for 6 months, so divide by 6. Okay, per month. Then you times 3 months for July, August, September. This is my prepaid amount, $700. Okay, and because I'm paying in advance for the next financial year, I subtract $700 from advertising expense. Okay, I'm paying in advance for next year. And I also have another account, okay, called prepaid advertising, $700. Okay, next, annual rent income is $13,200. Okay, the word annual rent income means that my rent income for the entire year is $13,200. Okay, but so far I have only received $12,100. Okay, this is the amount received. But this $13,200 is actually the income earned. I only received $12,100, but I'm supposed to earn $13,200. Okay, that's why there's a difference of $1,100. And this $1,100, I haven't received yet. Okay, I have not received, but I have earned it. That's why this $1,100, because I haven't received, I call this rent income receivable. Okay, $1,100. The next one, interest on loan was still owing. Okay, they didn't tell us the interest rate. Okay, but we can check from the question. The bank loan is obtained at 8% interest. Okay, this 8% is actually my interest rate. Okay, I borrowed $30,000 from the bank, and because of that, okay, nothing comes free in the world. I have to pay interest. My interest in this case, also known as interest expense, okay, 8% times 30,000, okay, which is your interest rate multiplied by principal. Okay, so my interest expense is $2,400. Okay, but if I look at here, they have only paid $1,008. Okay, so this $1,800 is the amount that they paid. but you are supposed to incur $2,400. Okay, that's why I have not paid $600. This amount that I have not paid, but I have incurred. Okay, another term for it is my accrued interest. Okay, because I still owe the bank $600. Okay, so here, I still owe the bank $600. Okay, known as accrued interest, amount owing to the bank for interests. Next one, depreciation note is to be charged, okay, etc. Okay, for this case, right, I'm using the straight line method. Okay, they gave you the scrap value. Scrap value means the residual value. So I take $88,000, which is my cost. Okay, minus scrap value. Okay, divide by useful life of 10 years. Okay, my annual depreciation is $8,000. Okay, hence here, I will create another account called depreciation of motor vehicles, $8,000. This is an expense. Okay, but remember that my total depreciation, which is my accumulated depreciation, okay, this is total depreciation to date. Okay, this is $16,000. Okay, hence my total depreciation should increase by $8,000, which is the depreciation for this year alone. Okay, this is the depreciation so far for all the previous years. Depreciation this year is $8,000, so I add it inside. Okay, same thing for plant and equipment. This is using the reducing balance method. Okay, so reducing balance method is percentage times net book value equals to percentage is 10% times cost minus accumulated depreciation. My cost of plant and equipment is $22,500. Okay, my accumulated depreciation for plant and equipment is 2250. Okay, so our depreciation for plant and equipment is 2025. I will have to add 2025 to my accumulated depreciation as well. Okay, lastly, a debtor owing $400 was declared bankrupt. The debt has yet to be written off. Okay, hence, because we confirm that the debt cannot be paid back, we have to write off the debt. Okay, and when we write off, it's debit allowance, credit, trade receivables. Therefore, okay, we debit allowance means that my allowance amount drops by $400. Okay, and because the debtor cannot pay back anymore, so I reduce by $400. The amount owed by debtors will drop, decrease. Okay, and because allowance is the amount that is estimated uncollectible, now that I confirm that the debt cannot be paid back, I have to subtract. Okay, so my estimated amount actually reduces. Lastly, okay, the amount owing by two other credit customers are likely to be uncollectible. Okay, and this amounted to $5,900. Okay, this is the amount estimated to be uncollectible. Okay, we are not sure that these are uncollectible. We only think that it is uncollectible. Hence, this is the ending balance for allowance account. Okay, the allowance account shows the amount estimated to be uncollectible. Okay, so I know that my allowance account, allowance for impairment, the last value have to be $5,900. Okay, this is given by the question. So what we do is that we see, okay, 1,006 minus 1,002, 1,006 minus 400 is 1,200. The amount estimated to be uncollectible now is $1,200. Okay, $1,200. But I know that my ending balance, I want it to be $5,900. Okay, that's why I have to increase my allowance by $4,700. And because my allowance goes up, it increases, more people is unlikely to pay back. That's why I have a impairment loss on trade receivables, $4,700. Okay, this value matches here. Okay, $4,700, which is the amount that is increased in my allowance account. Okay, and remember that impairment loss is an expense. That's it for question number 2.